Hey everyone, welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. Big SEC Ripple XRP news for you all. We have a bunch of documents and memos that have been unsealed, and they're showing that Ripple was essentially operating under the premise from a legal advice that XRP is not a security going back to 2012. I want to share what Ripple's general counsel, Stuart Allarati, had to say, what other attorneys are saying about it. And we're also going to talk about the SEC all of a sudden changing the story around Bill Hinman. Now it wasn't his personal opinion. Now he was giving advice for some other department. This is pathetic. Clearly, they're lying and they're trying to drum up anything they can. I mean, unbelievable that this is a government agency. We're also going to talk about Giancarlo, Crypto Dad, who went on Fox Business today to talk about XRP and Ripple and the SEC. And remember, he's the one who penned an op-ed in Forbes saying XRP is not a security. And 40 million XRP has been transferred to Coinbase. What's going on here? The timing is very interesting given all this is happening. So I want to talk about that and what folks are saying potentially of a Coinbase XRP relist. And we're going to talk about the Fed banning politicians from trading crypto and stocks and so forth. So before we get there, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. If you're listening on a podcast site, please give me a 5-star rating. Guys, earlier today, I uploaded my interview with Ron Hammond, Director of Government Relations at the Blockchain Association. I will be doing multiple interviews with Ron moving forward from a monthly basis. This way, you guys can get direct information from what's happening in Washington, D.C. as it relates to crypto. Blockchain Association is out there working with politicians and many folks in D.C. to help get clarity in the market. So we talk stable coins, the president's executive order, crypto bills and hearings, and much more. Link will be in the description for you guys to check that out. Now, a quick word from our sponsors. First is Algorand, which is building the future of finance. Algorand is getting significant adoption and investments. Both Anthony Scaramucci and Michael Arrington's hedge funds have invested hundreds of millions of dollars to build out the ecosystem. You have tokenization happening on Algorand with NFTs, CBDCs, and much more. Also, our second sponsor is TaxBit, which is the leading tax service provider in the crypto industry. It's a service I personally use to calculate my crypto gains and losses, print out my documents, give them to my accountant to get my taxes done. And tax season is coming up, so I'll be definitely doing that. So if you would like to learn more, check out the links in the description to both TaxBit and Algorand. Now, if we take a look at the crypto market here, not much happening, guys. We're still waiting for Bitcoin's move, the retracement. So right now, Bitcoin's testing support levels. And it's funny how the negative news is happening at this time. And we can see here on the daily chart, the weekly chart, that we're pulling back and then we'll bounce upwards. Here's what one crypto trader had to say. This is 360 Trader on Twitter. Bitcoin perfect retest of the big breakout. So here on the daily chart, you see the huge breakout we had, and Bitcoin's retesting the price. So once again, we have looming negative news with Russia and Ukraine and the Fed and rate hikes and so forth, but it's playing out with the market cycles. Bitcoin's going to retest the price points and then move up to the retracement. And remember, I've been sharing with you guys, well, I did share yesterday, blockchain backers model here using a previous bull run fractal showing we are in perfect alignment with it so far. Now, there's still ways to go. Hopefully everything plays out according to the respective fractal. And, we could see with the rise of Bitcoin's retracement to about 58K, that it aligns with Biden's executive order, which has been rumored to be coming for weeks. So it's funny, once again, how the news aligns with the charts. And it's something to keep an eye on because that could be a catalyst that sends Bitcoin to start pumping. Now, in my interview with Ron Hammond, and once again, you got to check it out, he said from what he's hearing, once again, he's in DC, so he's hearing from staffers and many different people, the president's executive order is not going to be anything bad. It's not going to be anything great, but it's going to be something good, meaning it's going to be, trying to rally the troops together, all the different agencies to come together and start studying crypto and digital currency and to essentially work on regulation. So it's going to be just marching orders, but it's a good first step. So that could certainly be a catalyst that sends the market pumping, because it's a green light from the top, the tippity top here, right? The top of the ladder. So we'll see how things play out. This is not guaranteed, of course, and it's not financial investment advice. But based on the facts that we have today, this is my thesis and what I'm thinking is going to happen. Now, speaking of the Fed and interest rates, well, Dan Moorhead, who's a macro investor, and I've interviewed him on the channel. Link will be in the description. He talked about the Fed. They continue, guys, to pump the markets. So he said the Fed is still inflating a bubble in bonds, stocks, real estate. It will take a massive policy U-turn to stop. The result is going to be a mess in normal asset markets. Best place to avoid the fallout of this policy failure is blockchain assets. Absolutely. Now, I know some of you are going to say, hey, crypto's been highly correlated to the stock market recently. It has, because it's falling into the category of risk assets. So when people de-risk, they also de-risk on crypto. That's kind of the downside, the double-edged sword of having institutional money here. But for the most part, crypto has not been fully correlated to stocks and what's happening in the economy. And I think when these other things fall off and the capital starts leaving these traditional assets, they will go into crypto, guys. We already see that with bonds failing. The money's going to go to crypto. And here's some more data to back that up from a reporter who said the Fed is still buying bonds, even though U.S. inflation has risen to 7.5%, the highest level since 1982. Fed balance sheet rose by another $33 billion to hit fresh all-time high at $8.91 trillion. Total assets now equal to 37% of the US GDP versus the ECB's 82% and BOJ's 134%. Guys, they continue to pump the markets. Watch what they do, not what they say. The Fed has been huffing and puffing about interest rates, and they're going to do this and do that. But it seems like the markets is pricing these things in, and the Fed may know that, right? They want to put the narrative out there and drive the prices down, get people scared. But I've said it before: if they come out and raise rates aggressively, the whole house of cards is going to collapse. This is going to be very bad. And inflation is already destroying wealth. So I say all this because it's important, because it affects the markets now. And I don't think the Fed is going to come out aggressively. I think the huffing and puffing, the talking points are enough to drive the prices down. So we'll see what happens. But on the note of the Fed, look at this headline from CNBC today. Fed approves rules banning its officials from trading stocks, bonds, and also cryptocurrencies. Boy, isn't this like 50 years too late? Like, these people have been politicians, Nancy Pelosi, and these people have been they have insider information. They're buying and selling stocks. Unbelievable, right? Now, if you and I try to do that, we're going to jail. To them, nothing happens. Unbelievable. And we saw it. A perfect example is right before the C-19 virus situation, before the announcement, right? In 2020, what did many of the congressmen and congresswomen do? They started selling off. Man, you can't make this stuff up. Once again, they don't go to jail. You and I do it. We go to jail. And that is why we got to keep them accountable and keep pushing. But this is a good thing. It's a good update. I'm just saying, I can't believe this wasn't a rule already, right? But a move in the right direction here. All right, guys, let's talk some SEC Ripple XRP news. Lots to go through here, but it's all important. So James K. Filan, be sure you're following him on Twitter. He's been releasing all the memos, the unsealed documents. So he tweeted out a bunch. And here's what Stuart Alderati, general counsel at Ripple, had to say about the memos. He said the conclusion of these now public 2012 memos is clear. XRP do not constitute securities. Wow. The fact that Ripple had the foresight to seek legal advice from a prominent firm in 2012 in the absence of a clear case law, and 5 years before the SEC even started talking about digital assets, should be applauded. So what's going on here? Ripple in its early days sought legal advice to make sure they were in line with securities laws and they weren't breaking any laws. That's good because it shows they weren't reckless and they weren't doing what the SEC is accusing them of, and that they were trying to get the proper roadmap and guidance. And they've always done that. They went in and spoken to the SEC and spoken to different regulators. They even got fined by, I think it was FINRA or FinCEN in the early days, and they paid their fine and moved along, right? But the SEC, no word, right? It was like nothing. Nobody showed up from the SEC. They let the market grow, not just XRP, but Bitcoin, Ethereum, and all these. They let it grow, and it got really big, and it matured. And now all of a sudden, they're popping up like, "Oh, you're going to get a lawsuit. You're going to get a lawsuit." But there was no fair notice. Where was the SEC with the guidelines saying, "Hey, anybody in the crypto space, Ripple, Ethereum, Cardano, whatever, here's the guidelines. Here's a roadmap. You need to abide by this." There was none of that. So people back in the day were just trying to figure out what the hell is going on. And of course, we know that Howey test cannot be used to regulate digital assets that exist on a decentralized network globally, because there's never been anything like this. You can't use 1940s, 1930s law to regulate this asset class and technology. It's asinine. But Gary Gensler is trying to do that. And so was Jay Clayton. They need to update the laws. So you have the fair notice defense, and then you have Ripple. They were seeking advice from legal advice, and the folks were saying, "Hey, XRP does not constitute a security." Now, they did give a slight warning that potentially there was a small risk of that happening, but based on what's happening and how things are distributed, there's no securities laws broken here. So that's what essentially Stewart is saying. Now, here's what James K. Filan had to say about the documents. He said, overall, favorable to Ripple and the individual defendants. Both memos are from Perkins Co. The first memo was prepared in February 2012 and sent to Jed McCaleb and Jesse Powell. It says that if new coin is sold in what now would look like an ICO, and he says, I didn't see the term ICO used. It would be likely that it would be considered a security. So if Ripple did an ICO, but we know they didn't. But Ripple then revised its business plan and went back to Perkins Co., which issued a second memo in October 2012. This second memo was sent to Chris Larson and Jed McCaleb. It says the October memo was more positive, and while it said there was a small risk that the SEC could disagree, Perkins Co. concluded that Ripple credits should not be considered securities. The memo also suggested steps Ripple should or could take to minimize the risk that the SEC would disagree with Perkins Co. The memos cover the full landscape of legal issues, not just the issue of securities, and I think show how careful Ripple was trying to be. Also, this was 5 years before the SEC really even started talking about digital assets. Once again, the SEC was nowhere to be seen back then. They were probably trying to scam other markets and assets, right? Doing the shakedown that they're trying to do now on crypto. It seems to me that Ripple has been very proactive, which is very important. There certainly is nothing in these memos that suggests that Ripple was being reckless or ignored any substantial risk. In fact, the memos suggest the opposite, that Ripple was being careful. That's very good. Once again, in the court of law, when you're looking at all the facts and you go back and say, was Ripple reckless? Did they, when they sought legal advice, did they ignore any massive flaw or issue that their legal counsel gave them? They didn't. And once again, they've been trying to work with regulators for a long time. Now, I know some people hate Ripple, they hate XRP, but the reason why I'm covering this affects the rest of the market, because a lot of projects did this as well and looking to seek advice and they've done ICOs. But at the end of the day, the one thing that the entire market can stand on, fair notice defense. Where was the SEC? Where was the guidance? Where are the rules, right? And once again, you can't use the Howey test. Logic will tell you this. 1930s law to go to with decentralized networks globally with tokens distributed in different ways, it can't work, right? So here's what Eleanor Tourette had to say. Statement from Ripple General Counsel Stuart Alderati to Fox Business on the unsealing of the 2012 memos. We are pleased with the court's order to release these documents to the public. The documents show a compelling legal analysis. that Ripple received in 2012 that XRP is not a security. The fact that Ripple sought such advice in 2012 should be applauded. That fact that it took the SEC 8 years to suggest they disagreed with that analysis while XRP traded in massive global market is baffling. Of course, anybody with normal level IQ and has a brain would see that, right? It's clear as day. But we know there was other things going on, like the conflicts of interest with Bill Hinman and Jay Clayton, specifically, of course, more on Bill Hinman's side. Now, speaking of Bill Hinman, the pathetic actions of Gary Gensler and the SEC continue. Here's what they're doing now. Jeremy Hogan weighed in on this. I'm reading it, but I can't quite believe it. Now, the speech wasn't Hinman's personal opinion at all, but intended to convey the Department of Corp Finance's position on digital assets. In the legal world, this is as crazy as it gets. The Ripple lawyers must be chomping at the bit. So now they're trying to change their story. We were saying it was his personal opinion. Yeah, we've been saying that for like 8 months. Oh, no, forget that, guys. Look, haven't you seen Back to the Future? Like, you could take a time machine and go back and change things. He didn't say that. It wasn't his personal opinion. Now, guys, he was trying to convey the Department of Corp Finance position. Pathetic. This is why I keep saying I believe Ripple's going to win. The SEC is looking like asses right now, and it's on display for the entire world. And of course, the entire crypto market, and now media is picking it up, right? So it is just look at they're grasping for straws here. They don't know what they're to do because they don't have a strong case. And they know this Hinman situation, he effed up big time. Right. But look, Jay Clayton and William Hinman were operating that way. They thought, who cares about retail investors? None of these guys on Twitter isn't going to do anything. Oh, but we did something. And there's 60K plus of us. And we have a representative in John Deaton. And a lot of the information and videos and the meetings and clips are being put out there for public discourse. And I'm sure they don't like that. And obviously, we know William Hinman got paid near 15 million, guys, from Simpson Thatcher, which is heavily invested in Ethereum. So he got paid 15 million for that free speech, given the free pass speech, right? And now the SEC is trying to see how they can cover it up, but they can't. Now, Chris Giancarlo, Crypto Dad, who I've interviewed on the channel a couple of times, and remember, he's the one who went and penned the article, XRP is not a security in Forbes. And he, of course, doesn't agree with Gensler and the SEC. And here's the title: former CFTC chairman, XRP does not qualify as a securities. Let me play the clip here for you guys.
New developments in the landmark SEC versus Ripple lawsuit, raising questions as to how the case is going to end, not just for Ripple, but for the thousands of investors who own the XRP token. Joining us now is former chair of the Commodity Futures Trading Commission and author of Crypto Dad, Chris Giancarlo, along with, of course, our very own Charlie Gasparino. Chris, you've said publicly you don't think XRP should be regulated as security. So why is the SEC so adamant about this?
It's great to be with you, Cheryl. Thanks very much. Charlie, good to see you.
Good to see you, Chris.
You had Chairman Gensler on just, I think, a few days ago, and he made it very clear he wasn't going to comment on an ongoing enforcement matter. The same applies to former chairman as much as it does to current chairman. What I would say is, before the SEC launched its enforcement action against XRP and Ripple, I penned an op-ed along with my colleagues from Wilkie Farr and Gallagher in an international law review, applying the same approach we would have taken when I was at the CFTC to analyze XRP under the so-called Howey test. And we came to the conclusion in that 2020 article that it wasn't a security, and I stand behind that article today. But as for commenting on that specific action, once it's in front of the court, it's not for me as a former chair to handicap how the judge may rule in this case.
Well, Chris, this case, the Ether is not before the court right now, at least.
So I don't want to play the entire thing here. It goes on and on because he talks about Ethereum and so forth. And he believes like these cryptocurrencies should be commodities under the CFTC. And obviously, like he said, he worked with a legal firm to do an analysis of XRP and the Howey test, not a security. And this is a former CFTC chairman, guys. And then we had Congressman Tom Emmer come on and say XRP is not a security. So I want you guys to understand the caliber of people who are saying these things. And it's not just YouTubers and people on Twitter, but you have government officials saying these things, right? A former CFTC chairman, a congressman, and many other legal representatives. And guys, I got big interviews coming up for you guys. Former SEC Commissioner Joseph Grunfeld, who served under Ronald Reagan, was an advisor to both the Ethereum folks and Ripple. And he's the one who sent the letter to Jay Clayton and the commissioners, don't file this lawsuit. Guys, I got that interview coming for you. And I'm also going to interview again, former SEC official Joseph Hall, who wasn't a commissioner, but he was an official. And he now is, is a lawyer, and he's not in agreement. So you have former SEC folks who don't agree with Jay Clayton and William Hinman and Gary Gensler, guys. So do you see what's happening here? This is not because I'm an XRP holder and you can say I'm biased. There's people who have no skin in the game as it relates to Ripple or XRP or crypto. They're saying, hey man, based on the facts, what are you guys doing, right? Gary Gensler, what are you doing? It's simply pathetic with what's going on right now. So great to see folks like this coming out and speaking about it on TV. So very interesting. Now, with all that said, yesterday, Thursday, 17th of February, today's the 18th, Friday, right? 18th. Near 40 million XRP was transferred to Coinbase. Wait a minute. You can't buy or sell XRP on Coinbase? What's happening here? I don't know what this is. Could a relist be in order? But look, you can't make this stuff up, man. Something's happening. This is on the ledger. Near over $32 million in XRP, guys. I don't know what to make of it. Maybe a relist. Maybe they're anticipating a win or some sort of settlement soon, and XRP relist. It could be very, very plausible here. I don't think this is outlandish. We have the data. Who's moving this XRP? Why are they moving it to a platform, that doesn't even offer, if it was a lending platform, you would say, okay, they're going there to maybe, stake it or whatever and earn yield. You can't. The SEC blocked Coinbase lending. So something's happening here, my friends. And I see smoke signals and breadcrumbs indicating I think Ripple's going to come out of this victorious. And at which point I believe, this, if it aligns with alt season, will help XRP's price to go crazy when you have the pent up demand and then the relisting at the same time, the news headlines and so forth. And the important thing too is the clarity for the entire market. It's showing the roadmap of how to fight the SEC, because Gensler is trying to go after the entire market, guys. Now, I want to end it on this item, which I think is pretty significant. The state of Illinois submits a bill proposing $160 million in tax breaks to attract Bitcoin miners to the state. Game theory, my friends. What have I been telling you all for years now, months now? As we start seeing these states moving, everybody's going to be competing for cryptocurrency businesses, mining, whatever else, other companies to come into our borders, create jobs and tax revenues and so forth. And of course, this is going to happen on a larger scale, once Biden gets his act together and gets things moving. But bullish times ahead, my friends. And I would love to hear what you guys think about this SEC Ripple lawsuit, all the stuff we covered. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.